Hi, Shrey sir. Am I audible?
Yeah, am I audible?
Yeah, you're audible. Okay, I think we can start. Just a second. Okay, so we can start. Hello everyone. Welcome to Interactive Technique 10.0 presentation session for Mudrex. So here today on panel we have Mr. Shrey Pandey, who is a quantitative researcher, and he will be judging all the teams here that will be presenting today. Before we start, just like a brief overview of how the session is going to look like. So, we have already sent you guys the team order. So, the teams will be coming and presenting in that particular order. The time for presentation is 5 minutes, and the time for Q&A is 5 minutes. So, after the team presents, for 5 minutes, we'll open floor for questions from the judges, which will then take place for like 5 minutes. The buzzer will ring just one, like just a minute, just at the last minute. So, like if 1 minute is left, we'll ring the buzzer, and you guys have to wrap up your presentations within that last minute. Also, just before we start, again, the rules are clear. Please do not extend the time limit. Also, we don't want the institute name to be mentioned in your speaker descriptions or anywhere during your presentation. I hope the rules are clear and the flow is clear. As mentioned before, each team will have four presenters, and those four presenters will be responsible for taking the Q&A as well. And before your team is going to go live on stage, please raise your hand so that we can give you guys speaker and presenter access. That's all for the rules. I think we can start. Team 9, please raise your hands.
Hello, am I audible?
Yeah.
Yeah, hi, you're audible.
Hello everyone, this is Team 9 and
Yeah, I think we lost you.
sorry sir.
Oh yeah, you're back.
Hello everyone, this is Team 9 and here we have made a strategy based on three indicators
Okay.
which are exponential moving average indicator. Second is moving average
Skip to the
convergence
idea part.
divergence indicator.
Uh, let's move to the idea part. I do not want any explanation on indicators as to what they are. Let's just move to the idea.
So based on three indicators, sir, we have made a strategy
Okay.
and using those three strategies. So using those three strategies,
Okay.
we have made a program. We have made that when to sell a stock or when to buy a stock.
Okay. So, what was the reason behind the number 93 here? Firstly, are you done with uh, uh, sort of putting across the idea for your strategy?
Yes, sir, it was based on statistical concept and tools.
Okay, so how?
Yeah, just a second, Shrey sir. I think Vishak, you can go ahead and explain your idea, and then there's like 5 minutes for Q&A. So you guys can discuss it, the idea during that time.
Okay, fair enough.
So first of all, we have a EMA indicator. It is a type of moving average that places greater weight and significance to the most recent data points, and it reacts more significantly to the most recent price changes. Not like SMA, which takes all over the period, and it is used in several time periods such as 10 days, 50 days, and 200 days. It gives us a chart that confirm a market move or indicate the strength. Second is MACD indicator. MACD is a trend following momentum. It shows us the relation between moving average of the security prices. It is being calculated by subtracting 26 period EMA from 12 period EMA. And sir, it triggers technical signals when it crosses above or below the signal line. Signal line is our 9 period EMA. When it triggers above the signal line, it gives us the bullish behavior of the market, and when it crosses downwards the signal line, it gives us the bearish behavior of the market. The speedy crossovers between them indicates the market overbought or oversold. It helps investor understand whether the bullish or bearish movement in the price of strength is strengthening or weakening. So third one is Arun indicator. Sir, it is a technical indicator which is used identifying trend changes in the prices of an asset as well as the strength of that trend. In the sense, it measures the time between highs and the time between lows over a time period. Sir, it composed of two lines. First is Arun upline, measures the number periods since high and number of periods since low, which is Arun downline. It is typically applied on 25 periods of data. When Arun upline is above of Arun downline, it shows the bullish behavior, and Arun down is above Arun upline, it shows the bullish behavior of the market of the trend. Using these three indicators, we came to an strategy where we use period 12 for Arun upline is greater than 93 and Arun down for period 10 is less than 50. And MACD we are taking 25 days period EMA, 50 period EMA, and 18 period MA as a signal line. So when it is less than, then we get a signal to buy the stocks. And sir, for 12 days period when Arun down is greater than 93 and period 10 Arun up is less than 50, for this given MACD is less than signal, it open price that we will sell, and we will stop trading at 6% of our loss. Thank you, sir.
Okay.
Yeah, so you can go ahead with the questions.
Can you keep bring back the PPT, the last slide?
Yes, sir.
So when Arun up is greater than 93, that means that we've just seen a high, right?
Yes, sir.
And when Arun down is less than 50, that means around 12 and a half candles ago, we saw low.
Yes, sir.
Okay, and what? So, in the results that you saw, in which conditions did this strategy perform the best?
Sorry, sir.
So, in the submission results that we generated, we gave you performances across three different types of scenarios, right?
Yes, sir.
So, where did this perform the best and the worst?
Sorry, sir.
So, what were the individual performances across the three scenarios?
Sir, initial performance, sir, we use all three because to reduce the risk of if we use a particular type of indicator, it increase particular risk. But if you use all three at the same time, it reduce the risk.
Okay, and what was the idea behind the 6% stop loss?
Sir, we carry a back test on Mudrex,
Okay, and this was the one that performed the best.
and we get a score of 8 on that.
Okay, okay, fair enough.
Yes, sir. Thank you.
I'm done with questions.
Okay, so I think we can now wrap up the presentation here and move on to the next team.
Thank you. Thank you, ma'am.
This was team 9, right?
Yeah, this was team 9. Okay, team 3, please raise your hands.
एक्सेप्ट कर लो इनवाइट हेलो
Hi.
yes there are three more members from the team
Yeah, yeah, we're adding
yeah
them. We're adding them.
yeah thank you
Yeah, hi. So, according to the rules, only 4 people are allowed to present, and I think 5 of you have requested to join the stage.
oh
So,
ma'am
we can only
can you
add
accept
one more
Kritika
person.
yeah can you accept Kritika
Okay, we'll accept her. Yes, I've added 4 people from your team.
Yes, ma'am. Can I share my screen?
Yeah, yeah, go ahead.
Good afternoon, one and all present here. We, the members of Team 3, are here to present our strategy on Mudrex Alpha Trading Quest. So, the aim was to create an automated trading bot on Mudrex for profitable trading on crypto assets and exchanges. Our idea was to create a generic strategy to have high returns, risk management, and good win percentage in variable market trends. So we made variations in parameters like tick intervals and parameters of different indicators by observing visual performance on TradingView. As shown in the figure below, the red arrow represents the sell signal and the green one represents the buy signal as indicated by the indicators whose charts is at the bottom of the screen. Like you can see MFI and variable MACD. So these were the indicators that we used to finalize our strategy for different crypto assets, ETH, XRP, and ADA. So we implemented our strategy on Mudrex platform using the indicators mentioned earlier. Salient features of our implementation are customized stop loss. When we are in loss of greater than 8% and get a sell signal from money flow index MFI greater than 80, we sell it. This is done to reduce max drawdown from 50% to 33% that was recorded earlier. Next, we used any two of the four indicators to get buy signal along with ADX and bullish trend to ensure we are not buying in a weak market. We also used compare blocks to compare two indicators and make decisions based on the parameters specified. A lot of peaks had price oscillator value greater than 2. So, in order to reduce loss and trigger sell signal timely, we chose price oscillator less than 2 combined with RSI EMA with parameter greater than 70. We used reference blocks to reduce drawdown. We prevented consecutive drawdowns using reference blocks, 10% drawdown from last sell triggering the price oscillator to prevent losses in strong downtrends. While implementing the strategy, some of the challenges that we faced are to overcome the trade off between return and drawdown. We experimented by adding new indicators like ADX and price oscillator, which significantly improved our results. We had to replace the candlestick patterns with some generic indicators like MFI to get viable performance on artificially generated time series data. So here is an example of significant reduction in drawdown by using reference blocks to limit trades in downtrend, which were earlier leading to high losses. So here we can see in the in the bottom figure, there are minimal trades during the downtrend so as to reduce the drawdown. So, on our best trading strategy on ETH, we achieved a Mudrex performance score of 8, having high returns, high Sharpe ratio of 2.37, indicative of less risk, and a profit factor of 3.08. Our overall returns are even slightly greater than the market returns, with 33% max drawdown, indicating our bot's performance and reliability in such highly volatile markets. In the process of researching and formulating our strategy, we delved deeper into the cryptocurrency market and have ourselves been motivated to invest in it in the future. Thank you. We are open to questions now.
Can you go back to the strategy slide?
Yeah. This
Okay.
one?
Yeah, this should do. So, what was the target here? Like, were you planning on capturing upswings in the markets, or were you? So, you initially mentioned that your main idea was to have a high win percentage and try to minimize drawdowns and essentially generate high returns. So, what was your final win percentage in your backtest?
So final win percentage was
65%. Okay.
yeah
And
65%.
so this strategy, which period? So, did you check the results for this one in the final evaluations?
Yes, our final evaluations for this ETH strategy was satisfactory in one case. In the consolidating case, it was satisfactory and it had Um, I think needs improvement in the other two, in the
Okay.
bearish and the bullish
So
market.
that's still okay. Were the returns generated? So this strategy, by at least the idea that I got, it tries to find upswings and tries not to trade during downswings.
Yes, sir.
Right. So in a bullish market, this would ideally generate your returns. Most of the returns would be generated in a bullish market, and in a what was your performance in the bearish markets?
So it was 34% analyzed returns, and I think it was some 70% analyzed volatility.
Okay, okay. That is still fair enough of a drawdown minimization during downswings.
Yes, sir. Actually, to minimize the drawdowns, what we did is like after we have gone through one drawdown, like there is a downtrend, and we have already suffered a drawdown. Then we use price oscillators so that unless the trend is reversed, we are not doing consecutive drawdowns. So we used one drawdown information to prevent consecutive drawdowns.
Okay, that's good. That's good. Um, yeah, I mean, I don't have any more questions.
Sir, the basically the thing was that we actually avoided to make any loss-making trades in the bearish market. So that's why we have some kind of annualized returns are so less in bearish market. So that's
That's
why,
understandable, right? That's the goal of your strategy, and the
yeah.
results reflect that. So that's okay.
Any more questions do you have like in the strategy?
Um, no, no. I think I'm happy with this. Although, as a pointer, if you are to experiment building more strategies, 20 trades is a little too low for statistical significance. So I would.
Sir, sir, we actually traded with 50 trades also, but we tried to decrease the total trades because a beginner in investor would like to make low trades that are highly profitable. Like we don't want any investor to go leave this crypto market because of high losses. That's why we made this total trades at 20. We experimented with a lot of trades also. Like we decreased the tick interval for the parameters to increase the trades. So which made the returns very high, but the risk was also high at that case. Like we initially we got that 50% drawdown for the thing. That's why we decreased the trades.
That all of that is okay. All I'm saying is that if you are to trade this with money, you would ideally want to wait for 30, 40 trades to actually take place before you put in some real money. That's all I'm saying.
Yeah, yeah, that was the improvement that we tried to like
No, so
achieve.
it's not just about improving the strategy to make more trades. It's also about if this strategy is what you believe in, then you should ideally wait for it to make a few more trades before you actually put in more money or any money.
Okay, sir.
It's just a general point, not
Okay, sir. Thank you.
nothing to do with your strategy. Yeah.
Okay.
Okay, so we'll have to wrap up the presentation and Q&A session now. Yeah, thank you guys. Team 4, please raise your hands.
Thank you very much, sir.
Yeah, so we can start.
Yeah, you guys can start.
Yeah. Okay.
Hello everyone, this is Team 4. I'm Sachin.
Yeah, hi, go ahead.
Hello everyone, this is Sachin. And this is Team 4. I'm presenting the strategies that we have now. So, can I share my screen now?
Yeah, please share your screen.
Uh, there's some.
Guys, can you call Sachin back? I think he left the stage.
Yeah, actually, he is having some problem in presenting the screen.
Okay, so we won't be able to wait for a long time. So, like,
Yeah,
please,
sure, sure.
call him back. Okay, sir.
Hello. Sorry for the delay. This is Team 4. I'm Sachin, and now we are starting. Can you see my screen now?
Yeah.
Yeah, your screen is visible.
So, hello everyone, I'm Sachin.
And I am Anshuman, and we'll be presenting our bot which we have prepared for this event. Yeah, moving on to Sachin.
This is the strategy for ADA, and here is the basic idea and the buying conditions of the strategy. This is the live market chart and an example. These are the buy conditions that we have. Here, buy conditions are price should be above the 200 moving average. This is the red line that is 200 moving average. And the second condition is the EMA 9. This is EMA 9. Yellow line is EMA 9. EMA 9 should be above the linear regression. When the EMA line crosses above the linear regression, there is another buy condition. And lastly, we have average volume should be greater than 20 last candles. Okay, so these are the intersection of all these conditions will give us the buy order. So here's an example. Like this is here price is greater than 200 EMA, and EMA 9 crosses above the linear regression, and also volume is greater than last 20 candles. So their buy order will execute, and sell order will execute when EMA 9 cross down the linear regression. So here the sell order will execute. This is how our model looks like in the Mudrex platform. These are the stats that we got from the Mudrex platform. Here we can see that performance score is 9, and Sharpe ratio is 3.07, and profit factor is greater than 10. And we can see that the win rate is 86.96%. And max realized drawdown is 6.32, and all the other statistics are also good. Next, we can see that the cumulative profit and loss graph. Here we can see that the graph is consistently increasing. There is very little loss, and finally we are close to the overall returns and the market returns. Okay, so next strategy will be presented by Anshuman.
Yeah, so this strategy has been made by me. So this strategy is on XRP. So the buy condition for this strategy is that the price should be greater than DMA, and price crosses a super trend, and price should be less than Bollinger Band, and RSI should be less than 70. So this has been followed by this particular candle, and the buy strategy is being executed. And selling order happens when this crosses down the super trend, and
Sachin, can you turn off your mic?
Yes, sir. Yes, sir. 1 second.
sorry for that. And so implementation, yeah. So implemented this is how our strategy looks on the Mudrex platform. So moving on to the next stats which we get against this strategy. So yeah, so we obtained a performance score is 9, which is really phenomenal in case of XRP, I believe. And the drawdown is less than 20%, maximum drawdown, that is 18%, and realized was about 7.32%. And the overall market return was greater than the market return, which we obtained from our strategy. So moving on to the next cumulative PNL. So we can see that the graph which we obtained for our strategy is really good, I believe, and is beaten the market return. And you can see the progressive increase in the graph, which is really good, I believe, in case of XRP. Yeah. So for strategy 3, that is for Ethereum. So basic idea of our strategy is, yeah. So the buy condition, you can see the buy condition which is being mentioned on the green on the left hand side, that is price should be greater than EMA, and price should be crosses of SSL channel, and trend up crosses up explosion line. So that buy condition is being followed on the particular candle which is being mentioned from green, that is on buy. And sell happen when the price crosses around the SSL channel. And we also use a particular indicator, that is WA, which is being mentioned in the bottom line from the green candle. Next. So this is how our idea looks on Mudrex platform. Next, yeah. So statistic which we obtained, the performance score is 9, and the trade won with 72%, and sharp ratio 2.55%, and profit factor is greater than 10. Next. So this is how our graph looks. Next. So these are the results which we obtain against our strategy. Okay. So what are the problems which you face while during structuring this strategy? So are we done? Or I can continue?
Yeah, your time for presentation is over.
Okay. So questions I appreciate.
Yeah. So I see that in general, your ideas. Can you go back to the result slide first?
Yeah, result. Yeah.
Right. So in general, your strategies have fared not that well in bear markets, but I think for XRP, 559% returns in the bull market is good. For ADA is more of a coin that has exploded in the past. So
Right.
14-17% is fair. And for ETH, 156% analyzed returns is not that good. But overall, I like the indicators and approaches that you used.
Thank you.
You should probably focus on getting in a little bit more trades
Right.
in your bots. Essentially, because when you try to avoid a certain kind of market, as our scenarios, this hidden test cases that we generated, they sort of were able to break through the conditions that you had to avoid bad market conditions. That is something that you can and
Right.
should probably focus on. And yeah, I mean,
So basically, what we did to avoid those conditions, like during like when cryptocurrencies goes in the consolidating market, it happens for the very long time. So that happens. What actually happens is they revolve around EMA only. So for that factor, what we did, we accommodated that price should be greater than 5% or 6% than EMA. So you can see the for consolidating market, our trade is like really good, like 0.00 and a percent rate. Like we are avoiding the consolidating market, and for EDA we also accommodated that market. And for bear market, what we did is that our buying order is only executing when the price is greater than 200 EM. So that is one major signal for the bull market. So I don't know where the problem arises that during bear market all we are having negative return. Ideally the order should not be executed, because in bear market EMA is not greater than 200 EMA. So means price is not greater than 200 EMA. So there is like this is something which I don't understand where we lack. Or but yeah, overall the strategy, and I'm also satisfied with the platform also.
Okay, so in
Yeah.
general, if one condition signified bull market so easily, then everybody would use that condition and everybody would make money, which would again make that condition redundant. So essentially, you cannot just use one condition to identify a type of market. You need to have a fallback or at least a couple of other fallbacks to ensure that
Yes,
you
sir.
let's say in a bear market the price falls down suddenly and then there is a burst of buying back. So that might push the price above 200 EMA for a little bit and then it would bring it down again.
Yes. So you can see all our strategies included at least three parameters. So
Yeah, so that
that's why
is
we
okay.
obtain a performance score
That
is
is
9.
okay.
Yeah.
But all I'm saying is that if you had more trades in your
Mhm.
pot, then maybe you would have identified a few more conditions earlier.
Yes, yes, we'll sure look into it. So,
Yeah.
yeah. Thank you, sir. Thank you so much. So are we
Okay,
done with the
team 13,
questions?
please raise.
Yeah, we're done.
Yeah.
Okay, yeah. So yeah, we can wrap up the presentation for team 4. Yeah, team 13. Team 13, please raise your hands.
Just give us 2 minutes, please. Thank you.
मेरे को प्रेजेंट करना है.
Guys, your mic is on.
Yes. Just. So, hello panelists. This is the team 13th for the Mudrex Alpha Trading Quest Challenge. So, just move on to the next slide, Karthik. So, we have with us, by the way, we have with us Maruf, me, Jivesh, and Karthik presenting today. So, we'll be keeping it short and sweet and describing our strategies. So we basically what our overall strategy was to identify the recent annual volatility of all the cryptos we were presented with. That were Ripple, Cardano, and Ethereum. And from general knowledge and from researching, we came to know that Ripple, being the most volatile, was the most volatile, and then ETH was second, and Cardano was pretty much doing a very less was the least volatile. So we decided the strategies on that basis only. Could you go to the next slide, please, Karthik? So for Ripple, we simply use trend detection strategies because when we were trying to execute a very some complex strategies with technical indicators, it was causing our performance to diminish a lot, even though returns were increasing, because it was just the because of the data set. So we were sure that the different data sets would produce different results, and it would result in an overfitting sort of a situation. So we finalized on a very basic trend blocks settings, so to identify bullish and bearish trend in prices. So we use very basic exponential moving averages and kept the persistent as 3 and moving average period as 2, and got got decent returns, which would be showing in the last slide. Please go to the next slide, Karthik. So for ETH, we had a situation that we could basically go for a trend plus volume kind of a setting. So, but then we decided to take a very basic technical indicator, that is a Rune oscillator, which is also again measuring the trend. And because on the basis of recent bias, we have Ethereum pretty much getting more volatile as the day passes. As the day passed, so that's why we kept we wanted to have a small amount of, not a very large period settings for detection of trends. So we kept our own oscillators, and we used it as shown in the figure. So we can move to the next slide, Karthik. For Cardano, we had a different strategy. We wanted to have our portfolio made in such a way, like, if just in case we had a portfolio of all these three indicators, all these three cryptocurrencies. So we wanted our at least one of it to be very give us a bullish result, so that the other two's value can be compensated, and we had a pseudo value at risk sort of a game played. So I'll ask Maruf to present you with the Cardano strategy.
Yeah, hi. I think Maruf is not audible.
Yes, I think he's not audible.
Am I not audible?
No, Maruf, you're not audible. Could you please speak?
Can I speak
Yeah,
from your?
speak with my mic. Okay, Maruf will be speaking from my mic. Sorry, guys.
Okay. Am I audible now?
Yeah.
Okay, sure. So our basic strategy, which involved Ichimoku Cloud Voice, that we had a total of three indicators, and each one of them was used to identify that whether the leading span A lines crosses the leading span B lines, or vice versa. So in case of the buy option, if the leading span A crosses leading span A, then we will execute the buy trigger, and the converts and will be the sell trigger. So these will be executed even if two of them are true. So that was very much for the Ichimoku Cloud.
So we'll proceed on with what the results were from our these three final boards. Karthik, next slide, please. So we came to know that our bullish market, all the three of our strategies played very well. So that was a great sign that although in bearish all the three were not good, we were pretty sure that if we are keeping all of them together, and due to recent improvisations in the in the crypto market, we have had an alteration from the there is last to last year it happened. Sorry, Ayushman, your mic. Yeah.
The time is over actually for the presentation.
Okay. Just wanted to conclude it at that we made sure that if we had a portfolio of all the three cryptos all together, we were sure to have a net profit instead of a net loss, because of the altcoin concept if is fading away day by day. So we were sure either of the three would yield us a bullish return, which would compensate for the rest of the risks. So thank you, thanks for listening, guys.
Okay. Can we go back to the results slide? Okay, so I see two of your strategies have done well in consolidating markets, which is always great. Um, Bearish market. So your hypothesis that if you had all three of them in a portfolio, then you would still need to worry about the bearish markets because the performance there hasn't been great. The H1 is still good because -2% is nothing in a bear market, but the other two could probably use some work. Um, yeah, I mean, apart from all of this, yeah, I mean, I don't have any questions. If you guys have any questions for me, that you can raise them.
Yeah, just a single question we had, that we weren't we tried a lot to decrease our bear market losses, but we weren't able to actually, especially in the Ripple and the Cardano thing. So what kind of things we should take care about so that our bear market performance improves?
So this was based on a spot asset, right? You could not do any short trades here. So I mean, in terms of drawdown control, you should probably be looking for a volume-based confirmations. Like your volume should not be too low for any candle. So a typical condition that we've seen works very well is essentially just volume of the current candle is greater than the average volume of the last 10 candles or something along those lines. And that should sort of filter out some trades that happen due to just very low volume movements. Apart from that, I mean, you could ideally we look into shorting strategies during bear markets and not really look to control drawdown on spot markets. So um, this is this is not that concerning. But yeah, I mean, 45 and 59% is the average return in a bear market. So that is something that needs to be looked at. There are probably how many trades were your bots making in the back tests?
As
On average, like around
I'll just we have to check. Backtesting of each strategy was at least what?
around 10 trades or so daily. And then
Like 10 trades daily, around
Uh,
10.
10 trades total.
Not
10
total.
20s
Per backtest we had 10 trades per. What was the
on a
date?
period of 1.5.
Yeah,
Like if you are using a
10
very
trades daily, I guess. Not sure.
10 trades daily.
around 10 to 20 cents.
But backtesting, I guess this was the case only.
10 trades daily. So in a 1.5 year period, that would have been around 5,000 trades.
Yes, I guess.
Okay.
Check. Okay.
Okay, then I guess you're just losing a lot of money in fee in the bear markets. But okay. You could probably just look at reducing trades in bear markets. That should work.
Okay. We tried, by the way, your start, like we tried OBV and volume blocks also, but still we had some decrement in the positive returns, so we just chose to not take them. Performance score also decreased, so that's why we didn't actually include OBV at the end. Thanks for the inputs though.
Yeah. Yeah, I think we're done here. This was team. 6.
It was 13. 13. Yeah. Thanks a lot. Thanks a lot, guys. Bye bye.
Okay. Teammate, please raise your hands. Okay, so all the 5 presenters are added. You guys can start presenting.
Hello, am I audible?
Yeah.
Yeah, you're audible.
Yeah, is my screen visible?
No, your screen is not visible.
Let me try again. Just a minute.
Guys, are you presenting? You have to start.
Yeah, 1 minute. We are having some problem with sharing the screen, so just give us a few more minutes.
Okay.
Hello, am I audible?
Yeah, you're audible.
Yeah. So we are teammate and we are going to present our strategy now.
Can you?
Just a second. I think your voice is echoing a little bit.
Yeah. You can go ahead. I think all of you have turned off your mics.
Yeah, you guys can start.
Idea behind the strategy. A well-known anomaly exists in the market, which is momentum. It refers to the inertia of the market. If the market is moving up, then it will continue to move up and vice versa. The reasons of momentum anomaly are price does not reach its peak instantaneously. Instead, the market takes some time to factor in the information and offers the trader some time to go long. Fear and greed leads to momentum anomalies. Our strategy is based on the momentum anomaly in the market. If the market trend is upward, then we want to go long. To strengthen the signal, we want to identify whether this trend is initiated with the high strength or not. This will increase the likelihood that the trend will persist.
The implementation. So firstly, to identify the direction of trend, we have used the exponential moving average, EMA. And we use this since EMA is more reactive to latest price changes. Now, if faster EMA crosses up slower EMA, then the market trend is upwards. To strengthen this signal, we have used two methods. Firstly, we have used the Rune indicator. Now, Rune indicator basically consists of two lines, Rune up and Rune down. Rune up measures how fast new highs are being created, while Rune down measures how fast new lows are being created. So we buy whenever Rune up crosses up Rune down, as it indicates that the uptrend is strong. And when using Rune crossover for buying, we sell whenever the Rune up crosses down Rune down line. For the second method, we are using a similar and simple concept that when the high price of the current period is more than that of the last 3 periods, we buy. And for selling, whenever the EMA crosses down, the faster EMA crosses down slower EMA, or the current low price is lesser than the last 3 low prices, we sell.
Results. These are the backtest results of our strategies, which we have already submitted. The Arun EMA strategy achieves Sharpe ratio 2.02. The EMA with highest strategy achieves Sharpe ratio 2.36. Now let's talk about drawbacks. Firstly, the Arun indicator isn't factoring in the size of moves. It only cares about the number of days since a high or low. Secondly, as indicators look backward and use past information to generate signals, the buy or sell signal may occur too late after a substantial price move has already occurred. Yeah, so that concludes our presentation. Thank you. You can ask any questions if you have.
What were your results in the? So, firstly, what market conditions were you trying to target? Momentum, right?
So basically, we have tried to target all the three market conditions. So basically, the first one is like bull, bear, and consolidating. So basically, these. So basically, we have shown the results in the back test, and in the out of sample results for Ethereum, basically, we have got results that is in bull market we got 474% annualized returns with 545 annualized volatility. So there is basically a sharp ratio less than 1. And in bear market we got -7% annualized return and 59% annualized volatility. So this is basically expected kind of, since we are only working on long only strategy. So it is pretty difficult to get a positive result in bear market. So but we were performing pretty well in consolidating markets, where we got 98% annualized returns and 20% annualized volatility. But in case of ADA, so for the strategies that we used for ADA, we got extremely nice results. That in bull market we got 2242% annualized returns and 2172 annualized volatility. So this is basically sharp ratio greater than 1. And in bear market we also got positive annualized returns, that is basically 20% annualized returns and 65% annualized volatility, which basically exceeds our expectation, that is basically above zero in bear market. In the long only strategy, in consolidating markets we got 280% annualized returns and 23% annualized volatility. So this is basically greater than sharp ratio greater than 10%. So which is pretty extremely nice in consolidating markets and satisfactory in bull markets. And yeah, needs improvement in bear markets because the sharp ratio is less than 1. But still we got positive returns in bear market, which was extremely difficult to get a positive returns in with long only strategy.
Okay. Okay. Um, I mean, that summarized all the questions that I would have. So, if you have any questions for me, we can go ahead with that.
So basically, we have tried to incorporate some information using the correlations between the price, volatility, and volumes. So basically, I want to ask that whether there is any way in Mudrex that we can calculate the correlation between two or more basically two variables or two indicators.
So not right now.
Yeah.
We are working on adding that. But I mean, there is a limit to the mathematical functions that you can use in a visual editor of sorts. So we are working on adding some custom blocks wherein you can write your own code.
Yeah. So basically, the correlation and the TSZ score, basically the time series Z score. If we can get these two functions, also, I think basically we all think that we can improve our strategies pretty much, much more enhancement or improvement in our existing strategies and make them more robust. So yeah, this is all from our side. Thank you.
Okay.
Yeah. Thank you.
Okay, Team 6, please raise your hands.
Which team was that?
This one was Team 8.
Team 8. Okay.
Yeah.
Hello, can you hear?
Yeah, you're audible.
Uh, just wait a second. Yeah. So I'll start off with start the present. Um, so hello everyone. I am Aruna Datar, the captain of Team 6, and today I'll be presenting our work on Mudrex's alpha trading quest in the entirety technique. So first I'll discuss the ideas that we had. Given that we were asked to calculate and place trades on the same symbol, this restricted our strategies to either momentum or mean reversion strategy. We came up with several indicators for both variants. For momentum, we used the Arun oscillator, the MACD. We used volume in two ways. One, we directly used the OBV and set a threshold for it. And the other way we used it is we compared volumes in different candles. We also used a variety of chart patterns which were readily provided on Mudrex, such as the three white soldiers, the Marubozu, and the rising falling three method. We also used the bullish close which was provided on Mudrex. Other than that, we also compared EMAs in different time intervals as a sense of momentum indicator. And we also were able to identify breakout in the supply zone as another indicator of momentum. For mean reversion, we found that RSI was one of the best indicators of mean reversion. We tried the EMA, the Lagware, and the stochastic RSI, and we found out that the stochastic RSI worked better for most of the for most of the cryptocurrencies. We also found that the stochastic oscillator, the super trend, and the Bollinger Bands were also good indicators for mean reversion in the crypto market. Um, so given the many indicators that me and my team came up with during the course of the testing period, one natural thing that we all thought to do was to use any k of n indicators. Here the value of k was varied across, like it usually went from n by 4 to n by 2, and the conditions were made stricter or easier with the corresponding increase or decrease in k. We also incorporated stop profit and stop loss and take profit. I'm sorry about that. We did this to make our strategies robust. We also made our own custom stop loss and take profit, which seemed to increase our performance. With regard to time, we closed our positions after some time to reduce the drawdown and the exposure. Usually, this was in the range of say 2 days. Um, Peak intervals, we noticed that for lower intervals, we got too many trades and got bogged down significantly because of the trading fees. And for higher intervals, we realized that we missed out on some good trades that we should have actually made. In this regard, we found that 4 hours and 6 hours tended to work best overall across strategies. Um, r- in To stop overfitting, what we usually tried is that we reran the same strategy on BTC and BTC USDT to check if our strategy was overfitting. If it usually it performed similar, but sometimes when it did not perform very similar, that was a big indicator that the strategy has overfit significantly. Finally, for breakouts, we identified the supply zone and then the entries were taken once the price moved above the supply zone. Similarly, positions were closed once the price went below the recent demand zone. Finally, I'll talk a bit about our results. So all submitted strategies had a Mudrex performance score of 8 when we backtested on our platform, and they usually had very good Sharpe ratios of 1 point greater than equals 1.8. As can be seen over here, the monthly backtests for all monthly returns for the when we backtest on Mudrex platform were very good for ETH, ADA, and XRP. The strategies also gave good results when we ran them on the nearby tick intervals. Um, when we submitted preliminary on, like when we were allowed the 7 tests, we see that ETH and ADA did not perform so well, but XRP gave very good average returns. Here, these average returns are the average of the bull, the bear, and the consolidating markets. Basically, it's simple division by
Hello.
and for final submission, we also see that we got reasonable results for ETH, ADA, and XRP, which were fairly similar to what we got for our preliminary submissions in those 7 backtests. Within the bear, bull, and consolidating, we saw that our strategies usually underperformed in the bear markets. We think this is primarily because of the restriction of prohibiting shorting of the cryptocurrencies. And finally, we saw that our strategies gave either good or satisfactory results in both bull and consolidating markets in a few instances, because we had both momentum and mean reversion strategies in place. And now, while we got good returns, as can be seen over here, the volatility can be improved by incorporating slightly better signals. With this, I would like to conclude the presentation. Thank you. Feel free to ask any questions.
So great ideas to figure out overfits. Firstly, you're testing on BTC as well as testing on different nearby ticket tools. Secondly, can you go back to the results slide?
Sure. Just a minute. Yeah.
Yeah, you mentioned that you can reduce volatility with better signals, but typically in the case of a market that is going up, the so volatility is independent of direction, right?
Yeah.
So if you are only moving up, the volatility is still high. So I mean, while you do need to work on volatility, it is a high volatility with a high return is sometimes also due to just high performance. So
Yes,
that
that I think is correct, because in our XRP, right, we if I have to show you the results, In XRP, this is a Q&A slide. We did not want to exceed the slide limit of 5 beyond. So we just added a Q&A slide, which we were only based on Q&A. So if you see in bull, exactly, you're right. We did get very good returns in the bull market and like slightly a very high volatility. But like here, as you can see, like in the consolidating markets, we got like a good score for like, because like we had annualized returns were like significantly higher than the volatility.
Yeah, so as I can see, you have decent performance in markets except bear, but we can sort of discount that because of not able, no ability to short.
Yeah.
But again, I mean, 47% is very high if as a mean return in bear markets, minus 47%. Sorry, so yeah, that is something that sort of implies that you're probably not exiting positions, or rather you're being late in exiting positions. So that is something that you can probably work on.
Yes.
Um, but yeah, overall, good presentation. No questions from me. If you guys have any questions, just feel free to ask.
No questions, but I really wanted to thank everyone on Mudrex for organizing this event and providing us the platform and the opportunity to like do this thing.
Yeah, I mean, if you like it, you can continue doing it.
Thanks.
Yeah.
All right, we'll move on to team one then. Team one, please raise your hands. Yeah.
Ma'am, can you give us 1 second, ma'am?
Yeah, sure.
Ma'am, our speaker will be friendly. Shuchi, ma'am.
Yes, just a second. Uh, is my screen visible? Hello?
No, your screen is not visible.
Um,
Okay, मैं कर देता हूँ. Okay, fine. I'll present my screen.
Yeah, sure.
Yes, ma'am.
okay, so while he's presenting, so hello everyone, we are team one and I'm the leader. So like our main idea was to utilize various indicators and optimally use them to predict the market. So we have used a couple of indicators as shown. Uh, since we know that the crypto market is very volatile, we needed to use some technical indicator which can adjust itself to the market conditions. And we found Bollinger Band technical indicator very useful for the same. Apart from that, to see if sellers and buyers are controlling the market, we used Marubozu pattern block in our strategy. And for some early predictions, we also included the evening star pattern in our strategy. Now, how we are implementing, Suhad would take over and he'll explain everything. Over to
Okay,
Suhad.
thank you, Suchi ma'am. I'll take up from here. So, what while making our strategy, the first thought which came out to our mind was that some candlestick patterns will, of course, hold a lot more weightage than many indicators. One of them, the foremost of them, was the Marubozu pattern, because in the Marubozu pattern, it has no wicks and shadows, and it indicates that the trade has gone strongly in one direction throughout the session, and it has closed at either the high or the low. So Marubozu was one of the most important factors to be inculcated in our trading strategy. So bullish Marubozu indicated a strong trend that buyers were gaining market control, and that was where we put the buy session. And bearish Marubozu indicated that we needed to sell our trades so that we could not lose a lot more in this. We could not result in unprofitable trades. Now, of course, there were other candlestick patterns to be considered, and we considered them, including the Harami pattern and the evening star, the morning star, as well as the engulfing pattern. But it was only and only the evening star which actually resulted in a beneficial trade for us. This is what we're talking about in the ADA asset class. Now, you would notice that our strategy is not symmetric. That if we are buying more as well as selling more. If it was to be symmetric, we would buy less, we would have bought less trades as well as sold more. So yes, we are trying to get into a more safer trading strategy, but that does not imply that we are not sacrificing over the buying trades. We are just selling more. We are gaining safety over the selling trades. Now, coming over to the indicators, the first indicator, which is of course the most important one, is the relative strength index one. That indicates trend reversal in a very strict manner. So RSI value, it changes, it indicates an overpricing or an underpricing at around RSI. It indicates an overpriced trade around the value of 70 and an underpriced trade around 30. So an RSI above 70 meant that it was sold, that we needed to sell our trade because it was severely overpriced. And an RSI less than 30 meant that our trades were severely underpriced and were undervalued and would soon get an increase in their prices. But considering that RSI, yes, less than 30 is important, is greater than 70 is also very important, but less than 15 and greater than 85, that is where it gains a lot more strength. So that individual factor is much more important. That was one of the reasons where, despite any other factor missing, we still bought or sold it. But if the volume of a candlestick pattern, if volume of one candlestick pattern was more than the average volume of 10 candlestick patterns, then that meant in support with RSI that we either had to buy it or sell it. Similarly, we also included some other indicators which are of course very important. But again, we bought indicators when any two out of them were to be present, but we sold them at even just one factor going against what we where we wanted our market to go, like Bollinger Bands or MACD value. Even if and simultaneously the normal moving average, out of these, if even any of these two present, we would buy the trade. But any one of them which was going against the market trend, we would sell our trades. why I took this value. This actually value is pretty was actually calculated from a lot of combinations. This 10 value actually MACD at 9 when MACD when 9-day MACD value, 9-day EMA of MACD value crosses the MACD value, we would be in the positive direction, we would buy it and then sell it. So the more or less this was the strategy. Now I'll be explaining the results.
So here are the results of our bot. As we can see in this graph, mostly for every month our bot was profitable enough. And in terms of losses, it managed to do less losses and cut the losses using the stop loss. We also use profit booking in our strategy. Here are the results of our strategy. So thank you. This was our presentation, and we are open to questions. Feel free to ask.
You have really good results in consolidating markets.
Yes,
Yeah.
sir. Sir, because I think in the consolidating market, the most important aspect is profit booking and choosing the correct stop loss. And by multiple versions of our bot and back testing, we were able to figure out the values which work perfect in the ADA market. So I think that is why our bot was performing very good in consolidating market.
Okay. The bear market performance could be better.
Yes, sir. Certainly, we agree upon that.
Were you able to identify any reasons why you were feeling or you were not performing as expected in bear markets?
Uh, Sir, what, sir? Why we were not able to produce results in?
Bearish markets.
Okay, sir. Sir, I think in the how bear market works is like in the bear market, we get a lot of false signals. We all know that in bear market, whenever there is a signal of buying, the selling that proceeded is actually very sharp. So I think that thing is our bot is not able to manage these false signals. It was not able to manage good enough. So that is why it is giving negative results in bear market.
Okay. Okay. Did you try to add a condition that if um, you were in a bear market, then you would not trade on some signals?
Uh, yes, sir. Sir, we tried that using stop loss only to prevent false signals, but I think
Stop loss doesn't prevent false signals, right? It just
yes, sir. Yes, sir.
okay. So that if you were looking to improve your strategy, that is the first thing I would try.
Sure, sir. Sir, we'll improve it upon the bear market. Sir, but I think in terms of bull market also, the returns were pretty good, and the consolidating market is
Bull market is not that hard to make money.
yes.
But yeah, anyway, the returns are pretty high for bull market too. So that
Yes.
is good. I'm mainly impressed with the consolidating results, but yeah, no more questions from me.
Oh, thank you, sir.
Thank you, sir.
Sir, shall I stop presenting?
Yeah, you
Any more
can
questions?
stop presenting.
Oh, okay. Thank you, ma'am. Thanks a lot for the opportunity. Thank you.
Yeah, so I think with this, we are done with this event. I would like to thank Shrey sir for taking out his time and coming here and judging all the participating teams. And yeah, also like with this, we can conclude the session. So yeah, thank you teams for coming here. Thank you, sir, for coming here and taking out your time.
Yeah. Bye.
Yeah, thank you. Bye.